in the coming weeks. Today's panel is covering the public equities space, but the series isn't going to include events on fixed income, on venture capital, private equity, and on hedge funds. And we're also hosting CV and interview skills workshops and an investment case study workshop. So to anyone in the audience that's interested in finding out a little bit more about some other asset classes or doing some skills workshops, please do check out the gameuk.org website for more information. So with that said, my name is Anne-Marie Fleurbaaij, and I'm going to be moderating today's session on public equities. And over the next hour, we're going to do some quick introductions, and then we're going to jump straight into some prepared Q&A about what it means to be a public equity investor and why that might be an interesting career. And then I'm going to ask our panelists for some advice for students looking to find out more about a career in investment management. And I want to say that for anybody who's interested in asking a question, we're going to use the chat function this afternoon. So do please submit your questions via chat. I will be monitoring and feeding them into the panelists as we go along. So first, some introductions. As I mentioned, my name is Anne-Marie, and I'm one of the co-founders of GAIN. And some of you may be familiar with GAIN as an organization, but for those of you just learning about us, we are a charity, and our aim is to inform and inspire young women in particular about the many highlights of investing as a career. And I personally think it's one of the most interesting, challenging, and intellectually rewarding career opportunities out there. And I'm sure that my panelists today will bring that to light with great effect. And we have a tremendous panel today. I'm so excited to be hosting. And we have three really talented and experienced investors here. And I wanted to ask you all to introduce yourselves. So if I can start with Klyzza Lidman, who's an equity analyst at Aubrey Capital. Klyzza, I wondered if you could give us a little introduction about yourself. And you founded an organization called Women in Investment Edinburgh. And I wondered if you could tell us a little bit about that.
Yeah, thanks, Anne-Marie. So my name is Klyzza, and I work as an equity investment analyst at a boutique in Edinburgh called Aubrey Capital Management. I've been there for about 4.5 years now, and I joined straight from uni, where I did a master's in banking and risk management at the University of Edinburgh. In Aubrey, I cover our European, global, and emerging market strategies. We're small, so multitasking is a key feature for everyone in the team. And I founded Women in Investment Edinburgh in 2017 after I saw the lack of investment management networks within Edinburgh. And since then, our members have grown to about over 70 professionals across 27 different institutions so far.
Great, how exciting. I'm sure we can find out more about that as the event goes on. So thank you for that. Yeah. And then next we have Alice Townshend of Arisig Partners. And Alice, I know you're managing a concentrated portfolio focused on Latin America, and I want to talk about that in a bit more detail as we go through the next hour. But for now, maybe you could just give a little bit of an introduction to yourself, and maybe you could tell us why you chose equity investment management as a career.
Sure, yeah, thanks, Anne-Marie. So I work for a boutique emerging market investment firm, managing, as Anne-Marie said, a small Latin America focused fund. I've been at the business for about 7 years, and a bit like Klyzza, I joined straight from university, where I studied Spanish and Portuguese. I started out with the firm actually as a global analyst based out in our Asia office. And then I eventually, after a couple of years, moved over to Rio de Janeiro, where we had our Latin America office. And then I moved back to London after a little while when we decided to relocate. So I still kind of cover Latin America, but from the UK. And yeah, I think, really how I ended up in investment management, I did a couple of internships during my university holidays, and realized I really loved the research side of things. So, really digging into a company spending time figuring out, you know, the competitive advantages that that business might have built, their ability to allocate capital, the quality of their management teams, all these sorts of things, to ultimately be able to come to a conclusion as to whether you think that business would make a good investment or not. And so I love sitting down and thinking about this from all sorts of angles. I think so much, though, sort of depends on the firm that you are up at, working at, within the investment management world, which obviously is incredibly broad. You know, I think one of the things that did attract me to the industry, but particularly to the firm I work at, is the sort of investment horizon. So how many, you know, when you're looking at an investment, are you looking to own that business for 5 years, 10 years, 20 years? You know, and the way that the business I work at looks at things is that we say, you know, what will this business look like in 20 years? And because of that, we take a lot of, we really dig into sustainability matters. So really looking at environmental, social and governance issues that might affect that particular company. So that was really something that drew me as well to the industry and to the company.
Great, that's wonderful perspective, and I'm sure we can get into that again as the hour goes on. And then finally we have Lucy Macdonald, and who is until very recently the Chief Investment Officer for Global Equities at Allianz Global Investors. And Lucy, you really are a global leader in the industry, and we're absolutely delighted to have you here today. So I wondered if you could take a minute to introduce yourself, and also to talk about how you came into investment management.
Yeah, delighted to, and very happy to be involved in the panel today. I've been involved in the investment industry for over 30 years, and with only 2 employers during that time. So I've worked for Baring Asset Management for 17 years, and I've just worked for Allianz Global Investors for 19 years. And so I'm just having my second gardening leave of a very long career, which I think I'm due. Why I went into investment in the first place was slightly random, because I studied music at Bristol, and when I left, it was actually when the city was booming, and it was a Big Bang time, which is probably ancient history as far as all of you are concerned. But it was a very exciting time, and it was a time when everybody was really sort of heading that direction. And so I sort of went too, and I managed to get myself a job at Barings as research assistant to The Economist. And from there, I could really look around at all the different parts of the city, because Barings at that time had it had investment, but it also had a bank, and it had a broker. And so I could really see all the different parts of the city. And the investment part was the bit which really attracted me, because the fund managers there seemed to have such an interesting time. They came from all different backgrounds, and it just seemed to be fascinating. But also it seemed to be a place where you could take, rather like Alice was saying, you could take longer term views. And broking was very transactional. People were just, trading. The corporate finance was transactional, but in a large way. But again, it was very, very sort of, aggressive, quite, just aggressive and male. And at that stage, certainly there was more diversity in the investment management, and it just seemed to me somewhere where you could really have quite a very interesting time. And so I was drawn to that. So I did I got myself qualified in the evening to do CFA, which was 2 years. And so then I qualified as an analyst. So I then started working as an analyst at Barings. I then persuaded them to give me some money to manage, so I did that, and then I became sort of a team leader then, but then I wanted to do global, and so I couldn't really do it there in the same way, because it was very sort of top down. I wanted to do bottom up stock picking, and so I then looked around, and this was about 19 years ago, to find where they really did bottom up stock picking globally. And that's how I found RCM as it was then, which had just been bought by Allianz. And so I joined there, and I joined there as the head of the global team, which was a bit of a stretch because I was only really starting to do global. But then I said I worked with the team there, and then became the CIO of the global and MD, and had grew the business, and we grew the sustainability business as well, which so as Alex was saying, that was also we had a fund there about 20 years ago, so we really grew that, because that's something I think we'll probably talk about later in this call, is obviously where the growth is. So that's really how I got to where I am, and now I'm how to the rest this summer.
Oh, that's great. That's super. And I think both Alice and Lucy, you touched on something which, and I'm really hoping that we can get into this with the Q&A, is that you didn't necessarily study finance or maths or engineering or any really hugely quantitative degrees at university. And I think again, like I say, I'm hoping we can unpick that a little bit as we go along. But I just wanted to maybe back up a little bit and talk about kind of what the day-to-day is for people in the audience who aren't necessarily familiar with what it means to be an equity investor. And I'm going to start with Klyzza as an equity analyst. And maybe you can just describe a little bit of the detail about your day and what specific things you do to analyze the companies that you look at.
Yeah, sure. So I'd like to start with no day is ever the same, which I think is such a huge plus for this role. And when I say no day is the same, I really do mean that, especially if you work across kind of different countries or different industries when you're researching. So part of my day includes kind of reading a lot of the news, current affairs, kind of what's going on in the different markets. It includes meeting up with companies, whether that's in person or, lately now, conference calls. And kind of beyond that, really, in terms of the analyzing, we put together financial models to better understand the financial position of a company. With Aubrey specifically, we really like to analyze, how well the company generates cash, and how well they allocate capital, and whether they meet our financial criteria and valuation targets. Then we write up research notes, which includes what the company does, why we like them, and why we believe they're a good investment. I think if we're able to explain what a company does, that's probably a key part. And that sounds pretty simple, but when you're talking about a semiconductor company, you have to kind of simplify it to be able, and which kind of reflects how well you understand the company. So yeah, every day can be very different. So tomorrow, for example, I've got a call at 8:30 with the company. And then I've got which is a European payments company. And then I have a call at 10 a.m. with an Indian beverages company. And then I have a call at 11 for a client pitch. So, which is definitely, to anyone that's listening, it's not your standard day. That's like quite busy, but it just goes to show, every day is really different, which makes it really fun.
And the wide variety of the skills that you use. And I want to draw out for people on the call that, what you described is a lot of reading and a lot of communications with other people, face-to-face, well, on Zoom right now, but, face-to-face meetings, drawing conclusions about strategy, writing. I think some people have a misconception that investment is just basically head down in a spreadsheet 24/7, and really there's so many other skill sets that are required. So, and Alice, if I can come to you in terms of, maybe you can take what Klyzza's talked about and build upon that in terms of constructing this concentrated portfolio that you're investing in Latin America. Maybe you can give us an idea of how you do that, kind of building on what Klyzza may have said.
Yeah, absolutely. I think perhaps it's important to say that, equity funds can really be very, very different. You could manage a portfolio of 150 companies globally. I just so happen to manage a portfolio of 15 companies solely in Latin America. So you can have a very broad view of the world, or you can have a very, very focused one. And, you know, neither is better or less rewarding than the other. But I think, to me, I really enjoy the sort of concentrated, focused side of things, because I think it just allows you to make very few decisions actually in a year, but with very high conviction. So, for example, I will often spend, or our team will often spend 9 to 12 months researching one company. So for some people that might sound incredibly boring. You know, there's no sort of fancy trigger pulling and, you know, trade, none of that at all. It's, you know, really getting into the meat of the company, meeting the management team a number of times, meeting their competitors, talking to industry experts, going and doing site visits. You know, it's a very deliberative process, and you know, I think that's really where, you know, the sort of concentrated side of it comes in. We sort of say, look, we want to know every company that we own incredibly well. You know, we don't want to leave anything uncovered, and so yeah, we just look for those businesses really that we think will be winners over the next 20 years. And obviously that's not exactly a simple thing to do, but I think when you have that sort of focus, it's an easier thing to do, rather than taking sort of punts on a number of different businesses. But that's how we sort of approach it. And just to build on Klyzza's point, you know, this is I would say I spend very little time with my head in a spreadsheet. It's much more about, thank goodness, it's much more about, you know, building your judgment on a business, and with all the available information, with all the information you're able to uncover. You know, and that can be incredibly rewarding when you sort of sit down of a business in Argentina and you know, meet the competitors and just get to talk to lots and lots of different people and really build a 360-degree view of that industry and how that business fits into it and where that's going over the next couple of decades.
That's fantastic color. Thank you. That's what really interesting and fantastic. As you say, it's a one kind of strategy, is that very concentrated, you know, very regional type of investing. And then Lucy, if I can draw you in, I mean, you've been looking at public equities from a global perspective for a long time, and I wondered if you can tie in what Klyzza and Alice have both described into what your role is, you know, into your role as a global chief investment officer, and maybe describing for our audience who might not be familiar with what that means, and giving some color from like the 30,000 foot level, maybe.
Yeah, and the role of the chief investment officer, it varies in different institutions, and in some places it's more of a supervisory role, and in others, for me, I was an active investor. I am still an active investor, and intend to be an active investor, so, you know, forever. So that's some element that I was certainly happy to carry on doing, but at the same time doing more supervisory of teams and people, and seeing, you know, which products and teams were working well, what performance, whether there are performance issues in some places, looking at the risk of some of the portfolios, dealing with the members of teams, ensuring that their workloads were fair and that they were coping, because there's quite a lot of stress that's involved in managing money, which is something I think we will talk about later in the call, because it's important to be aware of that. But also just making sure that all of the portfolios and products that why they're doing what they're doing, they have a clear process, that they're actually know what they should be doing in a sort of a linear fashion, and to ensure that you are dealing with the organisation and keeping any organisational issues away from the investors, so they can really focus on their role. Because when you're managing money, you need to be very, very focused, and not to be distracted by anything else that's going on. So that's really the role. And as I say, it can vary between institutions, but for me, I always wanted to make sure that I was still managing money.
Great. And in terms of when you're investing, if I can just ask, your investment process, would it look similar to what maybe Klyzza and Alice have been describing, or would it be maybe a higher level, or how would you describe the process that you follow?
Yeah, very. I mean, similar in being quite long term, being very bottom up driven. So really, and that means looking into the companies you're investing in, concentrated portfolios. Our global portfolios were 30 stocks contained portfolio, and 50 stocks was a sort of a more standard high alpha portfolio. And that means that every company you buy, you've really got to know in a lot of depth. And running a global portfolio, you need to have that resources there, and you need to be able to access it. So you need to have analysts, preferably in the different regions, which is what we have. And be able to access them through good technology, so that everybody really feels connected. And there are different ways of running global money. Some people do it very successfully. Some companies like Baillie Gifford do it very successfully from one place in Edinburgh. But for me, having your team in one location and one time horizon location, but then your analysts around the world in different regions worked very well, as long as the technology was there to connect everybody up. So I said there are different ways of doing it, but whatever works really. For global, I think you need something on the ground.
Yeah, that's great. And it highlights that there's no one particular model. That's exactly right. There's a lot of different models, and there's a lot of different ways that you can find your specialty within the industry. And maybe if I can go back to Alice, you joined Erseg, I think, straight out of university. But you mentioned that you'd been studying Portuguese and Spanish, and you'd done a couple of internships. But it just sounds, was investment really something that you'd always wanted to do? Was the internship something you kind of fell into? Can you talk about, how you found that?
Yeah, I mean, I think I'd very much decided by the time I'd left university, that's what I wanted to go into. And really it was those internships that shaped that decision, but also just talking to lots of people, in the industry. I think that if we're sort of coming to talk about, tips to people who are thinking about working in this industry, I mean, I can't underestimate, one can't underestimate talking to people, and finding out as much as possible about different ways to go about investing, the different sizes of businesses. That there's just so many different niches and areas within the industry. But no, I had very much decided, even though I hadn't come from necessarily a maths background, or something that one might think would vocationally lead into investment management, and I knew I wanted to end up looking at Latin America. But I also knew that the sort of stepping stone to get there meant that I would sort of start off with a broader view. So, which is why I began looking at global equities, albeit in emerging markets. So I very much sort of chose the firm knowing that they had a Latin America side of things, and that eventually, once I'd done my sort of training and built up sort of knowledge and an experience looking across the globe globally at emerging market equities, that I could then sort of commit and focus on a smaller region. So no, I definitely would say that I left university saying, right, I'm committing to this as a career, and it's not that I didn't do any investing myself at that point in time, I didn't have this, no one has the cash then to be able to say, right, let's try, investing my ISA. But now I absolutely do that. I love investing, just as Lucy was saying, it's that having those is it's a really wonderful, brilliant thing to do. And I knew I wanted to end up there eventually.
Doing that. Understood. That's great. And Klyzza, I'm going to come back to you. In terms of you've clearly you studied finance and banking at school, so clearly an area that was of interest to you. I'm wondering how you found your first job. How did you actually get it? Alice talked about the need for networking and just going out and talking to loads and loads of people, but maybe you can describe your experience, please.
Yeah, actually really interesting. So at 18, I either wanted to be an event planner or go into crisis management. So I didn't really so I didn't really think of kind of investment management at that point at all. But what I did find interesting was finance and economics in general, and how it's so ingrained in kind of everything we do, whether we notice it or not. So that kind of drove me to do kind of my undergrad and master's related to those subjects. I would probably say that I didn't have the most accurate perception of investment management at uni. I think a lot of the impression was it was very, like alpha, Wolf of Wall Street, like the narrative was very dominated on kind of investment banks and the glamour of investment banks, if you want to call it that. And I just kind of, I to be honest, I wrote it off. I did write it off for the first 3 years of uni. I wasn't interested. I didn't think that it was for me. And what really changed my mind was 2 presentations. One was done by someone from a PE firm explaining kind of the concept and the process of investing in a company and all the qualitative and quantitative aspects that go with that. And then interestingly enough, Aubrey, the company that I'm with now, presented what they do at the university, and they explained their investment process and their philosophy. And honestly, it was one of those moments where I was like, I didn't know what I wanted to do in finance, but this is what I want to do in finance. This is great. And it really tied in everything that I found interesting, both in finance and economics, but also the idea of being just constantly curious about why is this such a good thing? How sustainable is that? And it tied in a lot of things that I was interested in. So obviously I applied to them and I got the job, which was like, I'm really happy that I got the job. But it was, I would probably say I didn't, it wasn't one of those things where I was 18 and I was like, I'm going to work for Goldman Sachs. It was very much like, I'm not really sure what I want to do. I know what I find interesting. And I was really, really lucky that it came together the way it did.
That's great. Thank you so much. And before I move on, I'm just going to remind everyone in the audience that if you have questions, please use the chat function. And I will definitely feed them into the conversation. So please don't be shy. And with that, I'm just going to go back to Lucy and say, you studied music and then went into finance. And we've heard that from Alice and Klyzza how their paths. And I wondered if you, from your perspective, can really isolate some of the key things that drew you into the industry, and also what skills you think are what kind of skills do you think are necessary to be a great investor, and over time especially?
Well, I think there's really the skills are, there's the basic, quant and verbal skills that you need really to do anything that's at that kind of level. But there's also, really importantly, character is extremely important. And when you look at successful investors, there are some characteristics about them which are in common. And I think some of those are sort of inherent, and others are sort of through the experiences that they've had. But I think, you know, the really good investors I've known, they tend to be have great self-knowledge. You know, they are low ego. They are, you know, extremely sane. You know, they are, you know, driven, you know, in that they are so interested by what they do. They will do it, you know, for fun. You know, they will do it for, if they've made enough money, they will continue doing it because they're so, you know, they love it so much. And those elements are as important, I think, as the sort of the skills really that you need. And as I said, some of those, you know, can be learned through experience, but I think others are there before. And I think particularly this humility of knowing when you're wrong, that's incredibly important as an investor, to be able to accept that you've got something wrong. Now it helps, obviously, you're working in a team, other people can tell you you're wrong, but you've got to be able to accept it yourself and do something about it. Because, you know, some of the worst things that happen to investors are because they will not accept they're wrong. And I think we had experiences recently looking at some of the things in the papers with Wirecard, which is certainly, you know, one thing you should really have a look at. There's an interesting case history. We don't even know all the facts yet, but it's really interesting because you've got examples there of investors very experienced investors who just have not accepted that they, you know, are wrong on something and should have sold it some time ago. So I think that to me is a very, very important characteristic. And you know, if someone's ego is going to get in the way of them all of the time, they're never going to be a great investor. So I think those are some things I would very much highlight. And I do think that the ability now to work in teams and with other people is important. You need to be able to work with technology because there's a lot of it there. But you do need to be able to really thrive, particularly in global, where you can't do it on your own. You need to have a lot of people. You need to be able to interact well with people and to understand where they're coming from and to be able to interpret, you know, their confidence levels in a stock. You know, all of these things are important. So those are the things that I would highlight particularly.
And I think you bring out some great points. And frankly, we've been doing some recruiting ourselves, and I think you absolutely hit some of the key points that we look for. Things like robust, really strong intellectual curiosity, some evidence of being having some resilience in your character, and really, as you say, low ego, but also a great team worker. I think that those all are just as important as being numerate, and I couldn't agree with you more, Lucy. I think those are all really great
and the
things.
other point, actually, which you reminded me, which I didn't actually say, is you need a certain amount of courage and willingness to go, you know, your own path. And so that's, you know, balancing that against so you're not arrogant, but you are, you know, willing to hold your own in a you know, when you have to. And I think it's getting that balance right is what's so important.
Absolutely, being somewhat controversial. Well, not controversial. It doesn't have to be controversial, but being able to stand against the crowd. I agree completely. Yeah. Did you when you got into the industry, and Lucy, were those skills that you necessarily thought you had, or did you develop them over time?
I think you don't really. I mean, you learn about yourself through time, and I think there's nothing like investment for you to really learn about yourself because you have to, and that's why I think, you know, those that have survived and thrived and have done well, you know, they have these characteristics because they've had to develop them if they didn't have them in the first place. And so I think you learn more about yourself as you go on, certainly.
And I'm going to just add on one more question here, which is specific, you know, in your career, what has been the greatest challenge that you've had to overcome, Lucy? And it could be an investment call, but, you know, ideally it'd be something about how you developed as an investor.
Yeah, well, I think, you know, when I look at, you know, through the whole career, the biggest sort of event challenge that I had to deal with was when Barings went bust, because that was a great sort of historical interest, and I had just gone back to work after having my first child. This was 25 years ago. And so I just got all the mechanics up, and with getting everyone sorted, went back to work, and then Barings went bust. And that was the biggest surprise, because it was the Queen's Bank. It was a very just a top-notch institution, and it was a big learning point. We turned it around. Luckily, there was a buyer in the wings, so ING bought Barings, but we had lost about 2/3 of the assets because of that. The people just walked, understandably, and then we had to build it up again. And because I had just gone back after having my first child, then I wasn't in a position to go off somewhere myself. So I basically, with others, were encouraged to stay, and so we did, and we turned it around. But it was a huge learning experience, because it told me, really lessons that I got out of it were the fragility of financial institutions, and I think that's particularly banks, understanding how leveraged banks can be, and in that case they were very leveraged, more so than they knew. That was a very important lesson for going into the financial crisis. So, having been through that experience, then looking at the financial crisis, early on, you could see the dangers of leverage in the financial system. So that was really useful. I think also the understanding the importance of reputation, and that's for the organisation itself. Barings had been a name, you just needed to phone someone up and say, I'm from Barings, and you could get in anywhere. And then just within a week, no way, basically. You were a pariah, laughed at. It was the very idea that you'd be safe with money, and so it was a really important, because it showed that you then had to build up from your own competence, expertise, and you couldn't rely on that. So it showed the importance of reputation, particularly in financial, and I think that is even more the case now, when there's been such a lack of trust. And then lastly, the real lesson for me was understanding the importance of your own research and due diligence, because this was a situation where people just hadn't really looked. We didn't know even really. I assumed the grown-ups knew what was going on. I was relatively junior. I assumed that the corporate management would be understand how to run the company, and obviously they didn't. So it was a huge wake-up call that one should always do one's own due diligence. At your own company for a start, but anything that you look at, don't rely on other people, do your own research. And so those are so incredibly important lessons, which I then was sort of carried through, and big sort of learning points from the industry point of view, and my own point of view as well.
No, that's great. And I think that's I think you referenced earlier the Wirecard example, and I think anyone interested in a fantastic case study on the importance of doing your own due diligence and not necessarily trusting what the company is telling you. The Wirecard example is just everyone should be following Dan McCrum and see how the thing develops. I think it's going to be really fascinating. And we are getting some questions in, and there's a couple that I'm going to just hold off for a little bit longer, because they're more on kind of tips for finding a job, but I have seen them, so don't think I haven't seen them. I'm just going to spend a little bit more time unpicking a little bit if I can. Alice, I'm going to start with you again, and maybe you can just talk about it. We've talked about a lot of really fun and interesting things about the job, but maybe you could spend a minute talking about what's the best bit of the job. What's the part you look forward to? Is it meeting the companies? Is it travel? I mean, you mentioned that you going and meeting managements in Argentina. I mean, certainly that's got to be that would be certainly high up on my list.
Yeah, absolutely. I mean, I think one of the things that very much stands out is the travel and meeting people, particularly meeting people. I mean, to give some examples of some of the things we do, I mentioned that we do these site visits. We've been to see dairy production facilities in northeast Mexico, a brewery near Lima, or a bread factory in northeast Brazil. It's wide ranging and sort of eye-opening in many ways, but actually sitting down with the management is just the best experience. You and I think very much the first couple of years I spent, as I mentioned, out doing the on our kind of global team, being able to meet with management teams across a number of different geographies, and then honing in on Latin America, I really felt like I got that broad view of being able to say, actually, look, you know, management teams in India are excellent at XYZ versus management teams in South Africa are less good at ABC, and, you know, management teams in Brazil differ in these ways. And just, I think it was very much, our founders of the business I work for very much said, look, when you're new to this industry, you've just got to sit in on meetings and things will fly over your head and you won't understand a single thing, but, you know, it's soaking everything in, and eventually you'll pick it all up and be able to lead those meetings yourself. And so that's sort of where you get to, which and, you know, I love meeting the management teams of these companies and doing the travel. But I think, you know, at the same time, I also love getting back to my desk and, you know, perhaps writing up about those trips and together research reports. And, you know, I think to pull out some of the things that Lucy was saying, you know, obviously we'll spend kind of 9 to 12 months researching a company, as I was saying at the start. But, you know, I think one of the hardest things often is to have done all that work, all that travel, put in all that legwork, and to say, you know what, I'm not emotionally attached to this stock, and actually I don't think it would make a good investment, so we're going to park that. And you know, I think that's actually a very difficult thing to do when you've really built so much, you know, as much knowledge as you think.
So much time, yeah.
Exactly. And yeah, I think you have to you know, be very sort of unemotional in that sense when approaching these projects. But no, I definitely say that in terms of what's fantastic about the job, it's that texture, it's that mixture of meeting the management teams, but then also getting back and really you know, building out a thorough report and ultimately view on that business.
Staking your opinion. Great. That makes sense. Klyzza, actually, I'm gonna come to you with a question from the audience, if I can.
Yeah.
One of the audience questions is how do companies come on your radar? Like, how do you find the companies in the first place?
Yeah, so there are different approaches. I think it really differs from different houses and different culture, different like corporate cultures, depending on what you're doing. But when you've got quite a large universe, we tend to screen them for certain financial criteria, or what we'll have is kind of like watch lists from companies that, you know, we've maybe met, we understand the strategy, we like them, they haven't met a certain criteria, but they're there. So that when perhaps they do meet that certain criteria, we can revisit them. You know, IPOs come up all the time, which tend to bring kind of which brings new companies into markets. So those are really the three main ways we find like new ideas that within our universe. But what happens, I think, over time, especially with the managers, is you build kind of this big research base of companies that really kind of suit the strategy and suit the strategy and kind of suit what Aubrey is looking for. And so overall, in terms of our investable universe, it's actually much easier to manage than maybe some people realize. So that's one way we do it.
No, that's great. Thank you. The questions are now coming in thick and fast, which is brilliant. And I'm going to try to group a couple of them, if that's okay. And a couple of them on background and types of. We have a question of whether hiring pool tends to come out of investment banking or consultancy as opposed to out of university. And then another question, which is curious if anyone had considered starting on the sell side in equity research, and whether that's one route into another potential route into investing. And I don't know if any of you wants to kind of jump on that in terms of background. I think we've all demonstrated think you've all demonstrated that you've come straight out of university into investing directly. And I actually went through the sell side. So I think, you know, it can be a mix of both coming straight out of university or going an alternative route. But I don't know if anyone else has a view on investment banking or consultancy going into investment.
Well, shall I start on that one? I think it's more difficult to get into asset management from, you know, through broking or investment banking. I think if you're interested, I think you should go get straight in. And also I think that the broking at the moment is in quite a big restructuring mode. I think that the asset management industry is restructuring, but broking is in serious restructuring. So I think it's better if you can to get straight into asset management, and the preference is generally to really grow your own if you can within the institutions, because it's you know, you want people who've got the same values, who have the same, you know, views about, you know, the philosophy of investing. It's so much easier to do that. So I think if you can get onto a graduate program or another way in, which there are other ways in which we might talk about, but I think it is better if you can get straight in. That's my view.
Mm-hmm. Yeah, I would just add from my personal experience, I started off as an accountant and I went to the sell side and then eventually made it to the buy side, but it's not impossible, but I think, as Lucy said, there's a lot of shops where there are a lot of shops that do have investment analyst programs, and if you can get in and get that kind of training, it's certainly a fantastic place to start your career.
I also would probably say that there are a lot of smaller investment houses that don't have formal graduate programs. So Aubrey was definitely one of them. And you just have to be a little bit more kind of proactive, whether that means, you know, sending a CV, saying you're either interested in an internship, or if they have any job roles, or kind of, speaking to people is really important, because you never know kind of who might suddenly be looking for someone to take on to their team. And it's just really good to put your name out there, so you're kind of within that kind of frame of mind when they're suddenly realizing, oh, we might want to add someone to our team. This person recently reached out to me. Let me just give them a message. I mean, that is how I got offered to work with a PE firm, because I basically, this person presented at our university and I was so interested in what they were doing, and I was like, not obsessed, but so enthusiastic about the concept of investing, that I kind of went up to them, and I kind of put myself out there, and I was like, I'm really, really interested. If you have any internships, please let me know. And they were quite small, and they said they didn't have a formal structure. So when they did message me and I went through the interview and I unfortunately didn't get the internship, this person then moved to a different firm and then messaged me again and went, I really, you know, I thought you were a great candidate. Sorry we didn't take you on, but would you be interested in doing this? And, you know, that's what I mean by kind of, it doesn't hurt to just ask them to think about you, if that makes sense. Especially with kind of smaller firms who don't have a graduate program.
Definitely. I think there's a real theme here about networking and just reaching out to people and just asking them for advice and assistance. And I think that's a really strong theme coming through. Alice, I was going to ask you, and Lucy also touched on it earlier, about kind of growth areas. And someone's asked the question about sustainable investing, impact investing, and do we see it as becoming an increasingly important part of either the philosophy of how you invest, or do you think, you know, in terms of growth in the market more widely? I wondered if I could get both your views.
Yeah, absolutely. I mean, it's definitely an area of growth in this industry. I mean, it's sort of dominates the headlines when you're reading around the sort of fund management industry. Particularly at the moment, actually, you know, with people discussing how we kind of come out of this sort of COVID pandemic and what corporates are doing. to sort of in many various ways to ensure kind of business continuity. And kind of as I alluded to at the beginning, I think when you take a long-term view, you know, RSA absolutely, and I'm sure you know, Lucy and Klyzza would say similarly. Believe that those businesses that are focusing on, you know, how their supply chain is set up for the long term, how you know, they treat their employees, whether they're thinking about the packaging of the product they're making, you know, so many different sustainability issues, but those that are really addressing them and putting that, you know, has that top-down focus, you know, has the buy-in from the management and the board to do so, really we think will be the ones that are still around and flourishing in the decades to come. So I think, yes, it's the way that the industry is going, you know, really trying to, I think, sort of build benchmarks and try and think of what best practice looks like, but a lot of it's also coming from you know, the managers themselves. So, you know, we, for example, have found it so difficult to actually find consistent data across the different businesses that we look into. So actually we've had to build our own kind of way of measuring what good ESG practices look like, which was fine, but it becomes, you know, about one analyst's view versus another analyst's view, you know. So there is still that lack of sort of consistent data, but I think, you know, we absolutely integrate it into our decision making process. You know, we can't get a stock approved for buying unless we've gone through looking at corporate governance, looking at environmental and social, the potential risks that might that company might come across as in its normal business life. So you know, it's absolutely integrated into our decision making, and I think so many firms are now doing similar things. It's just about, you know, there are also those that, and you have to be quite careful, I think, those that kind of greenwash, so that pretend that they're doing a really good job, and you so often you receive a fantastic looking brochure or you know, sustainability report from some of the companies that you're invested in. You think, wow, these guys, this looks good, and then you dig into it and you call them up and say, what's this, and there's very little behind it. So I think both on what investment managers say they're doing and also what the companies say they're doing, there needs to be a lot of scrutiny applied to that, so that you can really sort of sort the wheat from the chaff and see who's talking a big game and who's actually doing a big game. Really, and so a lot of that comes down to, you know, talking to the company and really finding out what's behind their reporting.
Great. And Lucy, you brought it up you kind of preemptively brought it up about that this might be a big growth area. Did you want to elaborate at all on how you see those trends?
Yeah, I think they are, you know, as I said, it's increasingly integrated in the, you know, in mainstream investing, and we certainly saw that over the last 20 years, where we had a sustainability fund and then we had a mainstream fund, and then, you know, 5 years ago we checked performance, it was exactly the same. You weren't up anything by you know, looking at these factors, and so we integrated into all of the funds, and it's just, you're getting more performance out of these factors now as well. So you're actually being rewarded in a way that was not the case before. So it makes sense all round. But I think as a growth area, I think it will continue to be, you know, where the interest and the growth is. And it's also interesting from the gender, you know, balance point of view, is that when you look, you know, across the funds, the sustainability, ESG, has got a better gender balance as far as, you know, having more women involved in it. And I think that's, you know, partly because it wasn't taken so seriously in the past, so it was left to, you know, the women were allowed in, but it's also because some of the factors that tend to be things which women are you know, sort of feel more strongly about, particularly some of the social issues. But I think it has been a sort of a backdoor way of getting a bit more balance in the industry, which is you know, why we're all here today. So I think that's still the case. I think impact is definitely, you know, red hot, and is somewhere which is really growing now. And that's Elizabeth Corley, who was our CEO, and a great, you know, Dame Elizabeth Corley, greatly. She has started up the Impact Institute to work on the measurement to make sure that, you know, if people are saying they are having a social benefit out of the investing, that you can measure what it is, and whether that's the SDG goals, you know, whatever it is, they've been measured properly. So I think that is a really interesting area, and will continue. And I think there's been a bit of a question mark whether the whole, you know, COVID and recessions and everything will push that back, and people won't, you know, be so bothered anymore. I think it's got to a stage where you know, it's got, you know, good legs to it, so it will continue to grow.
Great. Thank you. We are rapidly running out of time, and I'm afraid we're gonna have to wrap up really quickly. I'm gonna ask each of you, it's gonna be bullet point round, one piece of advice for everyone on the call, either how to find out more about investment management, or how to find out how to find out how to really stand out in a crowd. So maybe I can start with Alice. Number one tip for our audience for finding out more from here.
Yeah, I think we sort of, and Klyzza was saying similarly, I think you just got to read a lot. And I think if you're naturally curious about the industry and naturally curious about equity investing, then you will find that a very enjoyable thing to do, and talk to as many people as possible, and just not be afraid to put yourself out there. You know, yes, you might get hundreds of sort of ignored messages or, you know, rejections, but if this is something you really want to do, then, you know, just keep plugging away at it. Read, meet people, send those emails, and yeah, definitely go into the industry. It's fantastic.
Okay, and Klyzza, your top tip?
Yeah, I would probably say if you are interested in investment management, and especially the whole equity side, public equities have loads of information. If you really want to stand out, especially with, I would probably say smaller firms. I can't tell you about big graduate programs because I didn't apply to any of those. What really made me stand out personally was because, again, I was so enthusiastic. I think that one carries quite a lot, and people will know if you're genuinely interested or if you're kind of chasing it for the title or the glamour of investment management. But so I actually went out of my way to research the company, and this is Aubrey actually, their investment philosophy, their investment process, and then I put together a little investment case study, and I presented it to them the first time I met them, or the second time I met them. And that, I'm pretty sure, got me on the list to further the application going down the road. So things like that, and kind of what Alice said in terms of reading, so much of what we do is being aware of the current affairs, whether it's a market or a strategy that you're interested in. And the more you're able to kind of show that you or perform that to whoever you're applying to, I think the more interested they'll be, because they'll actually be able to have an engaging conversation with you, rather than like a tick the box assessment process.
That's a great strategy. That's really good advice. And Lucy, how about you?
Yeah, I would echo both of that. I think there is, you know, read Berkshire Hathaway report and accounts, read, you know, what some of the really good investors have you know, say, and they do. But also, I think there's this point about enthusiasm and interest. You know, when you go to the interviews, just, you know, do your diligence, you know, do your prep and find out as much as you can. But it's those that really show real, you know, specific interest in whatever it is. Those are the ones which will really come out ahead. And this is, I did all the graduate interviews, you know, last year, and that's, you know, there's very smart people, and they're, you know, wonderfully qualified, great experience, but if they don't really seem to understand enough about the industry and the company, because they haven't really bothered to look, then I think you just don't get very far. So I think it really is that diligence and enthusiasm and interest, which is what pushes people out ahead.
Brilliant. That's fantastic. That's great advice. And we're a minute over, and I'm so thankful that the video didn't just cut off in the middle of the sentence. I wasn't sure how the video would work. But anyway, I wanted to thank you all for being our panelists. Alice, Klyzza, and Lucy, thank you so much for spending your time with
Pleasure.
us. And everyone in the audience, I wanted to say thank you for joining us tonight. I hope you found this as interesting and as insightful as I did. I've been doing this for 20 years, and I always learn more and more every time I do these panels. So thank you all for joining. And if you're interested in finding out more about investing, either a different asset class, like I said earlier, we've got a whole series this summer. Please go to our website, which is gainuk.org, where we've got a full schedule. You can also check out our Instagram and LinkedIn accounts. Our Instagram is Girls Are Investors, where we share updates and inspiration and work resources. Or you can always just email us at sophie@gainuk.org, and that is our kind of general mailbox, and we can certainly get back to you if you want to find out more. So with that, I will draw tonight's panel to a close with huge, huge thanks again to our fantastic panelists and to all of you, and really hope to see you at another event really very soon. Thanks so much. Have a good evening.
Thanks, Anne-Marie.
Thanks.
Thank you.
Bye.
Bye.
Bye-bye.